those of you who don't know me, my name is Erin Duddy, and I work at the Center for Sustainable Finance and Private Wealth at the University of Zurich. I am the online and next gen program lead at this center, and I'm actually running the webinars as well. This is our fourth webinar from our webinar series, which is has been sponsored by FC4S and Climate Kick. So this webinar is on it's titled From Future and Values to Mandates and Investment Strategies. And we're joined again by Britta Gruenig Castelli. She's the coaching program lead at CSP. If you missed Britta's last webinar, it was really great, and we've just uploaded it to YouTube, and we have a summary on our Medium channel, so you can check that out. And we're also joined by Sam Bonzi. He is an alumnus of our Impact Investing for the Next Generation program, and he's also the executive director of the Impact. And we also have Anna. She's our comms lead, and she's kind of in the background. You don't see her, but in case you have any questions or need any technical support, feel free to write her in the chat. If you don't know how to use, if you've never used Zoom before, just so you know, there's a little bar down on the screen. So there's a Q&A function. Any questions that you have, just feel free to put them through that, and we will answer them either live or after the webinar. And yeah, and then also, you're welcome to use the chat too. We might bring up some questions during the webinar and go ahead and just use that to respond. So that's enough for me, and I will introduce Britta. Britta, you're on.
Great. Yeah, hi everybody. It's really wonderful how many of you are taking the time to dial in for this important topic today, values. So let me just briefly share my screen with you. So as Erin has said, I am the coaching program lead at the CSP. And as you can imagine, a coach is asking powerful questions. So before we even get started with the presentation today, I'm just going to ask you briefly to get centered in this coronavirus isolation world and make sure that everybody's on the same page what we are talking about today and why. So the first fact, you see it already on the screen. Money transmits value and value. Every time you make a decision that concerns how you are allocating your money, you are not only buying the product or service, but you're also choosing a value. So for example, if now you were ordering a vegan burger rather than a meat burger, that would already be a transmission of values. So the first very brief check-in with yourself that I'm asking you is, think back over the last week to one instance when using your money, you made a value statement. You don't need to share it with anyone. Just get present within yourself and ask yourself, how did I express my value once over the last week with my money decisions? All right, the next question I would like to ask. We're talking here about impact investing. So if you look here, second fact is every investment has an impact. Question is it positive or negative? And again, just check in with yourself. How much do you know of the real world impact that your current investment portfolio is having? This can include decisions that you made very consciously, investments that you were choosing, but it can also include how your pension fund might be invested and you have just never looked at it. Now we're coming to the third question. I have mostly been working with inheritors now over the last decade. And it's just a fact that nobody has ever inherited a meaningful life. So what do I mean? People can inherit money on networks, a legacy. But meaning is something different. Meaning is something that is created by each of us individually. So have a quick check-in again with yourself and ask yourself, what makes life meaningful for me? During these coronavirus isolation times, we really have the opportunity to check in and reflect on this and also make possibly adjustments for the next phase of our life. And then last but not least, we know something that is clearly inherited. And, you know, our children, our grandchildren, and generations to come, they will for sure inherit the world we are creating today. And so the question to you is, hand on heart, what is the world that you want to create? And what are the actions that you're currently taking to make this come true? This is really, in essence, what we're talking about today. But coming towards, closely to the topic of our webinar today, we're asking, how can we move from values and preferred futures to actual investment portfolios? So how do we do that at the CSP? We have the IRI CSP Impact Investing for the Next Generation program. This is a program that is jointly run by the Initiative for Responsible Investing at Harvard Kennedy School and the Center for Sustainable Finance and Private Wealth at the University of Zurich. The program has very successfully already run 5 times, and we're currently putting together the 6th cohort that will start in October this year. So yeah, the 6th cohort is starting in October. We have by now over 140 alumni globally from family offices. And the impact that we have been able to create with this program is really extraordinary. So over 90% of the surveyed alumni said that they would not have started their impact investing journey without this program, or that the program played a really, really key role in getting them started. But I can tell you for certain that the participants and alumni of this program are just some of the most inspiring people. And you're going to meet one of them today. So how exactly do we create this impact? How do we help the participants to invest like it means something? Now, of course, it is an extensive academic program that I cannot summarize in a short webinar, but it boils down to 3 key steps. First of all, it's a discovery process. What we call that is, first of all, people are guided to find out what is it that they own. Then the second thing is, what is it that they want? So I started to ask some of those questions. What is the future you want to create? But also, who are you as an investor? Once all of this is clear, the question becomes, how well can you actually communicate your vision to those people who are going to execute it? So depending on your situation, this can be talking to your banker, can be talking to your family officer, or maybe the CIO within your family office. Can also be a key decision maker within your family, or you might want to get everybody together on the same page to do investments together. So the communication becomes really, really important. If you're not able to speak the language of the person who's going to implement your vision, it's just not going to happen. And I'm going to come back to how exactly one practical tool is that we're teaching at the program. And with this, we come to the very crucial point, capital allocation. That's what it is all about. We are, an academic institution, but this is not a talk shop. We want capital to move to impactful investments. So this is very, very important. And this is also where the translation into an actual real life impact investing portfolio takes place. Now, if we are successful in doing this, it brings us to the future that we all together collectively want to create. So if you have a look at this image, who knows? Maybe one of you knows what this is. It is actually the image of a brain, and you see the neural pathways of the brain pictured here. Now we work at the university, of course, with the brain. Everybody knows how this works in principle, right? We teach. But then also very recently we started to coach. Now, how is coaching related to the brain? With this method of coaching, which is called coactive coaching, we are effectively changing the neural pathways in the brain. It's a method that is based on neuroscience and positive psychology. And it's just creating a new reality within your brain that helps you act much more productively in real life. So the first thing that I was telling you about, the concrete tool. How do we help people to translate their values to their investment portfolios? Concrete outcome of the program that we're helping participants to achieve is what we call the impact policy statement. Now, in the investment world, it's very common to have an investment policy statement. It specifies all the key parameters, for what kind of time horizon do you want to invest, what will be the desired amount of money you want to have when, and so on and so forth. Without that, it becomes very, very hard to give a mandate to an investment professional. It's actually legally required to have all those criteria specified for your bank advisors. So it's really good to start to get on top of this so that you get the actual outcomes of your investments that you want. So here in an impact policy statement, the question of impact, of course, comes on top of that. So what is the purpose of these assets? Maybe this goes along with your theory of change. What is it that you want to change and by which mechanism? What are the pots of capital that we are talking about? Is this your entire portfolio? Is this a specific portfolio that is targeted at a specific mission you want to achieve? Make that clear. What are the levers of impact that you want to use here? Are you talking about your own personal assets, your family portfolio, or what? Maybe the foundation money. Then we come to the next point, constraints. What exactly are the constraints? Do you want to have constraints in terms of the risk you want to take, in terms of the liquidity? What are those parameters that matter to you? We come to the approach. There are different approaches you can take. Is this a carve-out or a whole portfolio approach, for example? How about your risk-return profile? Do you want to invest and get results according to the benchmark? Do you want to even outperform the market with your impact portfolio? Or are you happy with a concessionary approach that is prioritizing the impact? Because you might already have more than enough money. So these are questions that need to be clear to the investment professional to really deliver the impact that you want. Impact themes. What really matters to you? The Sustainable Development Goals. But which of those really matter to you? Which ones matter to your family? And what matters to the world? When we come to asset classes, maybe we follow up on this a bit more in the questions, but there is such a wide variety of ways in which you can have impact. Let's say you are managing a foundation's money. You can say, okay, we want to just exclude investments in weapons because that really is not aligned with the mission of the foundation. By the way, I hope that all foundations do that. Then you might also say, but this doesn't move the needle much, because if I divest from weapons, somebody else might just pick those investments up. So what is another thing you can do? You can say you go towards ESG integration. That might still be, publicly traded investments, but they have the ESG screen. So ESG data is used in investment process. But you can also go a step further. You can say, yes, okay, I want to invest in public companies, but I want to make a difference in them. I don't want to invest just in the green companies that look amazing in my portfolio, but actually my investment there doesn't really change anything. The company is already doing good. So what if instead I kind of overcome my own hurdles and I invest in a less green company where me as a shareholder, maybe together with other like-minded shareholders, can use our collective shareholder power and engage with the company and use shareholder activism, voting, all those engagement techniques to make that company a little bit more sustainable. Of course, beyond that, you can also go towards actual, impact investments in the more narrow sense. They go deeper into providing solutions that without your money would not be out there in the market. So what we call that is additionality. Without your money, it wouldn't exist. The three key terms that we're using there are additionality. Would this investment get enough capital if it wasn't for you? Second one, measurability. How can we make sure that it really generates impact? And the third is, of course, the intention to create positive impact. So these are different ways to look at your overall asset class distribution. And you can then look at quick wins. So for example, if you just have a normal equity fund, you might want to just replace it with an ESG equity fund, or normal bonds with green bonds, or maybe a private equity fund with an impact fund. So things like that is, it's very helpful to know how do you want to get started, but within the context of the whole overall impact policy statement. So how does coaching get into all of this? Let me tell you this, there are very few people who wake up in the morning and they are crystal clear what they want their legacy to be. It's a really impactful decision to choose one way of allocating your capital over the other, especially if you are aware that your decisions will multiply over the generations and generate vastly different outcomes over time. So it's kind of an important question to know, what is your actual vision? What is it that you want? And that is where coaching can become very helpful. So in the context of the latest cohort of the Impact Investing for the Next Generation program, I was able to offer to 12 of the participants to go in a much more deeper process to understand who are they, what role do they want to play, and what kind of world they want to create and how. Now, within coaching, the outcomes are very individual because it's a tailor-made process. So for one person, it might be about purpose. Why am I at this point in history? And what am I doing here? So once you're clear on this, it provides a kind of a North Star that you can follow, especially in uncertain times. For some, it's the vision. For example, somebody might say, I'm setting up this impact fund and actually a team to manage it. But how do I communicate the vision that I have somewhere there, but I cannot really spell it out? How can I make this easily understandable for every new employee and investor in this impact fund? For somebody else, the main challenge to overcome on their road to become an impact investor are their relationships. Everybody has a family of origin. and some are more complicated than others. But some I might be working with different members of the same family, and while maintaining confidentiality, still raise their awareness of how they might be contributing to the problems that they are facing together. Next point, alignment. It can be such a huge relief when finally your investments, the way you spend your time, the way you run your business, and your philosophy of life are just in alignment. And that happens when you're living your values. So this is a topic that I'm working towards with some of the people. Leadership. All of that might already be clear for you, but you want to maximize the impact that you can actually have and think of other ways to improve your conscious leadership capabilities. And then it can also be very simply a question of identity. To put it bluntly, who am I with or without money? Can be a tricky question to answer. So once all of this is discussed, these are not questions that you can just simply ask and rationally get the answer. But these are things that you need to experience. So this coaching approach goes very much into the body, into our intuition, into feelings, and unconscious experiences, visualizations, and all of that. In addition, of course, to uncovering your hidden beliefs that you might not be aware of so far. So the Harvard Institute of Coaching called this approach the gold standard of coaching because it's really based on positive psychology and neuroscience. And it creates results by creating these new neural pathways in your brain that are already putting you into a new reality. So you can easily take the decisions that otherwise you would have been stuck. You would not have known how to overcome the situation that you're in. So all of this leads to clarity and impact. And that's, of course, what we're talking about. So maybe just to wrap this first part of the webinar up. After hearing all of this, I don't know how it lands with all of you. So you might think, okay, the CSP, what are you? Are you, a bunch of hippies that is trying to save the world? Now, I know that we can't do that by ourselves. We're not so naive to think that. But at the same time, the urgency is there. Everybody sees what's happening to our world. And we're now in the decade of reaching the Sustainable Development Goals. So we really need to pull together. If you ask me the question, I don't want to save the world, but I really want to create a new wave of leaders that are shaping a world that doesn't need saving. And to sum this up, we are the leaders that we have been hoping for. So I'll stop the share. And I don't know if Erin would like to, I don't know if there are any questions.
There are. That was really, but that was a really good activity. I went through the exercise as you read it too. So thank you for doing that. So one of the questions that came up is, we have a financial advisor with several mutual funds, and it gets very difficult to have visibility of the various companies that are buried in the portfolio. And so there are probably up to 100 companies in this portfolio. And it's probably a basic question, but do you recommend getting visibility of just a few so you can really understand their impact? Or would you recommend just trying to understand some sort of sustainability score?
Huh.
Either one of you is welcome to answer.
Yeah, good on that. I'm happy to offer an opinion on this.
Great. Yeah, Sam. For those of you who don't know who Sam is, here he is.
Hi, everyone. You'll be hearing a lot more from me in a moment. I think the simple answer to this question is that this is really something that you should discuss with your financial advisor and not take unqualified advice on, but I'll give some unqualified advice, which is, I think that the subtext of your question is really important, and it's the significance of knowing what you own. And I think that that is, I know that it's something that Britta touched on in her presentation and is really insisted upon, I think, in the context of the Next Gen program, and it's so important and really a basic responsibility, I think, that any asset owner has, is to know what you own. And there are reasons why investment advisors now allocate client funds to multiple mutual funds that themselves own, you know, hundreds or, you know, many individual securities. And often the principal justification for that is diversification. And so a very good conversation to have with your investment advisor is, what does diversification in a portfolio really mean? How many individual securities does one need to own in order to be properly diversified? There are many schools of thought on that. And if you're uncomfortable with the fact that it's very difficult for you to know what you own, and it's important to you to know what you own, that's a really essential conversation point to raise with your advisor. And in terms of, and one of the values of knowing what you own is that you can then assess the alignment of what you own with your personal or family values. It also enables you to better understand the impact of your investments in the world. And some people are very interested in assessing that at the level of each individual stock or each individual security that they own. There are also, you know, and I'm sure your advisor should be able to provide you this. There are ratings agencies that do, you know, sustainability scores or environmental, social, and governance scores at the mutual fund level as well. Some people are satisfied with that kind of roll-up score. Other people are not. It really depends on your preferences. But the fundamental point that I would emphasize is it's really important to make your preferences clear to the advisor and have a detailed conversation with them about whether or not your investments are accurately reflecting your values, your preferences, your needs.
Awesome answer. Thank you, Sam. Did you want to add anything, Britta?
That's good.
Okay.
Comprehensive.
Comprehensive. Yeah, thank you. So one other question was about the impact statement. And yeah, this person is just asking for more elaboration and maybe some concrete examples or anything that you can provide about that.
So I think we will go there, right, when Sam is doing his part. So maybe could we postpone this? And if, you know, there's an additional question, because that's why we thought it would otherwise be too abstract. If we don't have like a concrete example of what such a statement could look like and how it could translate into a portfolio.
That's a good idea. Why don't we go ahead and then transition, and then we'll see what questions come up after we have some concrete examples from Sam.
All right. Awesome. Thanks. Okay, let me figure out how to share my screen here. Okay. Thank you, Britta, for kicking us off, and thanks for inviting me to do this. And thanks to all of you on the line. I know that I feel like we all have sort of limited Zoom budgets at this point in terms of the amount of time we're willing and able to spend on Zoom every day. So I'm grateful that you've chosen to spend some of that budget with us in this conversation. I was really excited when Britta shared with me, you know, the envisioned topic for this webinar, and talking about values and visions for the future in the context of investing, because I definitely would not be virtually present with you all having conversations about investing had I myself not discovered that it really was possible to meaningfully integrate my own values and my own vision for the future into my investments. And I am a person who not all too long ago was fundamentally disinterested in investing and actively avoided conversations about my own investments. That was the case at about this time, about the time that this picture was taken. This picture was taken, I think, almost exactly 8 years ago, so long ago that we didn't even have the ability to take high definition photos. But this is me and a dear friend of mine named Raymond. We are standing in Raymond's field in the village of Kwakiliga, Tanzania. I lived in Tanzania at the time. I had helped to start a social enterprise working with subsistence farmers in northeast Tanzania. And Raymond was one of our partners that we started the organization with. And this picture is taken, it captures a very happy moment in an otherwise agonizingly difficult time. This picture was taken right before the government of Tanzania declared a famine in the region where we are. It had not rained in the place where this picture was taken in 2.5 years. 100% of the population of this region are subsistence farmers that depend on what they grow to provide food for their families and all of their income. So the effects of this were absolutely devastating on the community. And here I had dedicated my life to working with and for these subsistence farmers, and trying to do that in the face of a famine was the most difficult and humbling experience of my life. And it was an experience that taught me, I think, very starkly the absolute limitations of my own ability to create change in the world, especially if I was limiting myself to one tool for creating change. And this was a time where I was dedicating myself entirely to my professional work in this context, and I was, giving philanthropically to support this work, but I was absolutely ignoring the other resources that I had available to me to create change, and frankly, resources that were at a much more significant scale. And I didn't understand that that I could be utilizing those resources. And the experience of, again, working within this excruciatingly difficult context really awakened me in some ways, in painful ways, to that reality. So shortly after this photo was taken, I took a little personal retreat and used that time to reflect more deeply on what my own mission in life was and what the values were that were guiding me in my decision making about how I was putting my resources to work in the world. And I realized that when I reflected on what coming from a background of family wealth had meant for me, it, in the simplest terms, had really given me the opportunity, far more opportunities than anybody deserved, really, to achieve my fullest potential in life. And I could see so clearly how that was an opportunity, a basic human right that was not available, denied to so many people, and including people I loved, like Raymond. And I realized that I wanted to put all of my resources to work to create a world in which every person has the opportunity to achieve their fullest potential. That was the vision of the future that inspired me. And again, that was a vision that I realized I not just could, but really needed to be putting all the resources available to me to work in order to achieve. And I also spent some time reflecting again on the personal values that I thought could guide me in my own decision-making about how I put my resources to work. This was an exercise that I had seen my family go through and that had been very meaningful to us as a family. It had never occurred to me until this moment to do it personally. So I came up with my own personal statement of values. And about 9 months after I did that, I sat down with my investment advisors and for the first time shared with them that I was really interested in getting involved in how my assets were being invested. And I made clear to them, much to their excitement, that I wanted to be putting all of my investment resources to work in pursuit of this mission in alignment with these values. And so we worked together to create, an impact investment policy statement that could reflect my financial interests and needs and my mission, my values, and my impact interests more broadly. And the point of this slide is really just to emphasize that it is possible to do that integration in a structured way. And I think it is really important that if this is something that's meaningful to you and compelling to you, that you take time to do it in a structured, reflective way. And I was very fortunate to just sort of stumble into that process. But I think programs like the Harvard CSP program are an amazing opportunity for that kind of structured reflection. So anyway, in terms of what it actually looked like for me to translate my mission and my values into an investment strategy, I thought, okay, what is a strategy? Well, it's a statement of what one wants to accomplish and why, and an articulation of how one intends to use the resources available to accomplish those objectives. And so my mission and the statement of values gave me a very clear sense of the why and some direction on the what. I then spent some time thinking more precisely about, what does it actually take for on a structural level for somebody to have the opportunity to achieve their fullest potential. And to me, in a very practical sense, having access to a great education, living in a stable and safe community, in a safe home, having access to healthy foods, these were all things that were essential to me. Again, having that opportunity to achieve my full potential. And those were things that I could deploy resources in a number of different ways in order to help make available to others. So that was an opportunity, again, to translate my sense of mission and my interests into a specific set of thematic investment interests. In terms of thinking about some of the more conventional financial objectives and constraints for my investments, it was really meaningful to step back and say, like, okay, if I say that one of my values is courage, what does it mean to be a courageous investor? What does it mean to be a compassionate investor? And when I did that reflection, I realized, like, okay, to be a courageous investor means to be ready and willing to take risks, perhaps more risks than I might otherwise take. To be a compassionate and generous investor meant to me to seek opportunities to invest in ways that would support marginalized communities. Being a humble investor meant, and this was probably the easiest thing for me to recognize, is that I'm not an investment expert, and I needed to find partners that I could trust. Being a patient investor, in very practical terms, meant being a long-term investor, and being ready and willing to accept, higher levels of illiquidity to again invest in companies or funds that had longer term time horizons, in order to achieve their objectives. And demonstrating perseverance in the context of my investments, I think one meant that I needed to hold myself accountable to keep staying engaged and to keep caring, which at that time was not something that was guaranteed to happen. But it also meant being ready and willing to fail, to have the humility to learn from that failure, and to keep at it, to not be intimidated or knocked off course by any initial failures that I might have in the context of my investments. And so it was such an enriching conversation to be able to have, again, in a very structured way with my investment advisors, to take the language and the constructs of, again, a conventional investment policy, and to directly and explicitly integrate, again, my own personal sense of mission and my own personal values into that. And you can see, again, in very practical terms, what that looked like in the development of a set of financial objectives, targets, a statement of risk tolerance, and an asset allocation. And here, here is my target asset allocation, and my goal is to invest for impact with 100% of my assets. And what that means differs depending on the asset class, differs from asset class to asset class. But you can see that I have, for example, again, a substantial allocation to illiquid investments like venture capital, private equity, real assets. That's part of being, I think, a courageous and patient investor. And I have a primary emphasis on investing through funds. I want to be a supportive partner to investors who are far smarter and far more capable than I am. And part of, again, being a curious investor, as one of my values, is really exploring widely, being open to investments across themes, across sectors, being willing to try things out, and also being ready and willing to invest, for example, in first-time fund managers or more experimental managers. And those are people who historically have often generated the best results for their investors, but it's the hardest, they have the hardest time raising capital. So again, being a courageous and compassionate investor to me meant being ready and willing to partner with those kinds of managers. Just to, again, make this all slightly more concrete, in terms of some example investments that I've made that I think exemplify my sense of mission and values. As I said, I think education is one of the essential means by which individuals are able to achieve their full potential. I myself was a product of school systems that were very poor. It had no consequence in my life because of the background that I came from. I was able to emerge from those school systems enriched by the experience, but I saw so many of my friends and classmates be done great harm. Their lives were harmed deeply by the failures of those school systems. And I recognized that technology can help address a lot of the fundamental inequities in our education systems. And so I became very interested in investing in education technologies, again, especially those technologies specifically designed to enable higher access to high quality educational opportunities for any student in the world, especially those students who are living within marginalized communities. So Owl Ventures and City Light Capital are two venture capital funds that specialize in education technology, and I think exemplify that interest. I should also emphasize that I think that education technology is an area where I can have where an investor can have significant measurable impact, even significant additional impact, and generate meaningful financial returns. I don't think there's necessarily a trade-off in the context of that category of investments. I also, this is part of being, I think, a generous, compassionate, and humble investor, recognize that there are areas where finance can be a very powerful tool for addressing a specific social issue or environmental issue, but you cannot or should not attempt to maximize financial returns in order to accomplish one's social or environmental objectives. And so by far my favorite thing to do in the context of my investments is lending money to community development finance institutions that themselves finance the development of affordable housing or low-income housing and sustainable community infrastructure in marginalized communities in the US. And again, this to me is such an essential part of giving every person access to a safe shelter is a fundamental part of creating a future in which every person can achieve their fullest potential. Again, in some ways, in some cases, we can use finance as a tool. We can use investment as a tool to accomplish that objective. And so I love doing that, again, as one part of a diversified investment strategy. We've seen some questions coming in, so maybe I'll pause here and we can do some Q&A.
Awesome, thank you, Sam. That was a really great example of what Britta was talking about, moving from, so really understanding your values and then aligning them with your investments. I think that was a really concrete, great example. So thank you for sharing. So one of the questions that came up is for Sam, and it's, how do you see public equities having an impact? And do you just hold those as you need to have something liquid, or do you see a deeper impact purpose in holding those?
Yeah, great question. I do hold them as, again, part of a diversified investment strategy. And I would say I am modest in terms of what I think I could ever personally achieve in the context of my public equity allocation. I do believe that large corporations, i.e. those represented in public markets, have an almost incalculable impact on the world. They largely define the world in which we live. And so I do think that any impact investor who has an allocation to public equities, again, has an opportunity or even a responsibility to be an active owner. And so most of my investments within my public equity allocation are in funds that engage in, that do shareholder engagement. I also think that there is value in investors signaling to the market that they value sustainable corporate behavior. And so I think that, again, from the perspective of additionality, I don't think I'm personally changing the world by investing in funds that employ rigorous sustainability-based investment theses. But I do think the success of those funds, and one of the funds I'm invested in is Generation Investment Management, which has been an enormously financially successful investment fund. And they have done much, I think, to drive the conversation on the financial value of corporate sustainability. I do think that changes in the long run the culture and practices of business. So I think, again, most of us will end up holding public equities within our portfolios. And so the question really then is, what's the most that you can do from an impact perspective? I think there's abundant research that shows shareholder engagement is the best way. But I think signaling impact through ESG funds is also, or signaling the value of sustainability matters too.
Great. So we have one more question. Well, we have a lot more questions, and the questions that we don't get to, we will address in our Medium article. But this is very relevant for this time. It's about the COVID virus specifically. So the virus has shown inequality also in Western and developed countries. And how can impact investing support in mitigating the impact of the COVID crisis and ensure that inequality does not worsen? This might be a bit tough, but maybe we can just focus on the developed countries investing.
Yeah, absolutely. Well, I think two immediate reflections. One, it's so important for those of us who spend a lot of time in the impact investing world to recognize with humility the limited effect that we can have on the world through our investments. We can have great positive impact, but impact investing is not a panacea, and there are huge systemic challenges that are not best addressed by investing. So I think we have to be humble about that reality. I also think that in the context of responding to a pandemic, I think that there will be opportunities to invest, especially kind of longer term opportunities to invest in companies that or enterprises that are helping improve social and ecological resilience that can minimize the long-term harm that this pandemic creates and also prevent the likelihood of the next one occurring. Just to give an interesting example from what you're seeing on the screen, the SUN initiative was a program that was created by foundations and CDFIs, community development finance institutions in the US, in the midst of the 2008-2009 housing crisis. And it was an effort to purchase the mortgages of working families who were at risk of defaulting on their mortgages. And mortgage default sets off a chain reaction with serious social and economic consequences within communities. And so a group of impact investors got together to purchase the mortgages from perhaps unscrupulous lenders that had issued them or that had come to own them, reissued those mortgages at rates that families could afford. And I just woke up today and looked at the news, and people are, at the beginning of this month, families are starting to miss their rent payments and miss their mortgage payments. So this is I don't know if there will be a comparable entity spun up now like the SUN initiative, but it is an example of the way that finance will be needed. We will need to use finance as a tool in order to, as part of a much more comprehensive, obviously, probably government-led response to this pandemic. I think just as a final point, we have to be particularly mindful and particularly aware of the risks that our investment strategies, even the best intentioned impact investment strategies, have of perpetuating the systemic inequalities that are creating the problems that we're trying to address in the first place.
Yeah, Britta, I know you have a lot to say on the topic, and I'm aware that we have a couple more minutes left. So
yes,
yeah.
I'll just say one very short thing. You know, if somebody is really interested on the impact of the pandemic on impact investing, there is a specific webinar on this topic tomorrow, which you find on Eventbrite, and it's going to be by the managing director of the Global Impact Investing Network, Sapna Shah, and with Jamie Broderick, who's also an impact investing practitioner. So if anybody is interested in that, that's a webinar taking place tomorrow that you find on Eventbrite that is called Impact Investing in a Crisis.
Thank you for that. Okay, so we're gonna wrap up now. We have a lot of questions that we'll get to after the webinar. We'll cover them in the Medium article. But if Britta and Sam just want to give one quick key takeaway, and also you can do that in the chat as well. What do you think?
Sure, I'll offer mine, and then Britta, good for you to have the final word. I think to anybody who is interested in embarking on this journey personally or with your family or others, I cannot recommend highly enough the value of taking time for structured reflection on your mission, the values, those define the why, for why we're putting our resources to work in the world in the first place. And those are the guiding lights that direct everything we end up doing within our strategies. So take the opportunity to do that, do it soon, and get to work, because we don't have time to lose to create the future that we all want to see.
That's nearly too good to say anything else to. The only thing I will add is, if you don't define who you want to be, you will be quickly and inaccurately defined by others. So I think in that context of impact investing, this is very true. So make your money worthwhile out there in the world and put it to use for exactly the things that you believe in.
Great. Well, there will be a follow-up email with all of the information on where to find this recording, where to find the summary, and also where to find the next webinars that are coming up. So thank you all for attending, for joining. We really appreciate your interest. And if you're interested in the IRI CSP Impact Investing for the Next Generation program, then that'll be in that email too. Okay, thank you for joining. I know Sam has a hard stop, so thank you so much for sharing.
Thank you all.
Thanks, everyone. Bye-bye.
Bye.